The housing market is fucked up because boomers think that young niggas is stupid. Basically, I gotta pay you, right, 4 times the price for a house that you have stayed in for 4 years because you got new goddamn tiles on the floor. Basically, this is the logic. Nigga, I gotta pay you to marry your wife that you have been fucking for 40 years because you gave this old motherfucker a boob job in the BBL. That's basically the fucking housing market. A boomer bought a motherfucking house for $150,000, and now that nigga talking about I gotta pay him $2 million. Nigga, what the fuck is you gonna do with $2 million? You about to die. You about to die. Like, imagine a nigga telling me, imagine a nigga fucking a girl, fucking a woman for 40 years, and now you done basically slutted her out, and now you want me to pay more than you paid to marry her. Nigga, you paid $10,000 to marry her, but now I gotta pay you $100K to marry her? And all she got now is a BBL and a motherfucking boob job? Come on, man.
227,548 home foreclosures in the United States in 2026 so far. Did not know is a 21% increase in 1 year in home foreclosures. Home foreclosures are when people are 120 days late. That's 4 months. That's not a Biden problem. That is a current administration problem. Repossessions are up 33% higher than in 2025. These foreclosures have gone up every single month in 2026. Let me tell you the highest home foreclosures. Tell me what you notice. From number 5, Illinois. Illinois is number 5. Number 4 is Delaware. Delaware is the 4th highest in home foreclosures. Number 3 is Indiana. Indiana is number 3. Number 2 is South Carolina. The most home foreclosures, let me see if you can guess it. Number 1 in home foreclosures in the USA is Florida, the red state of Florida. What did you notice about the top 5 states? Drop your comments here. Every single month, the foreclosures have been trending up more and more. People cannot pay their bills. We have auto repossession delinquency, student loan delinquency, credit card delinquency, home mortgage delinquency. You having a hard time paying your bills because gas has gone up 37%, and this was all self-inflicted. Groceries have gone up 50%. 50%. You found this post disturbing but informative. Please like, comment, follow, and share for more economic news. And please buckle up. This is going to get even worse. It's almost 170 days with the war with Iran, with no hope in sight. In fact, they said they're not negotiating anymore until January 2029. Wow.
Oh, wait a minute. If this doesn't tell you that housing has turned into a complete and total scam, I don't know what else to help you. JP Morgan drops 750 billion, that's almost $1 trillion, to fix the housing crisis. Yeah, we're going to fix it. And what they mean by fix it is we're going to make it so easy for you to get into a house. We are going to take anybody that's living and breathing. If you have a pulse, we are going to help you get into a house because we care that much about you. We love you. We just want to get you into a house. Don't you want a house? You want a house, don't you? You need a house, right? You want a house. Why are they so desperate to get everyone into a house? Oh, I don't know. Property taxes? Could that possibly be it? The more people in houses, the more people have to pay taxes, HOA, insurance. I mean, I'm sure insurance companies are like, please give them money so they can give it to us. It's a scam, folks. It's literally turned into a scam. And there's the receipt. If I had a microphone, I would drop it right now.
Are we finally seeing the warning signs of a housing market slowdown? Home prices, high mortgage rates, affordability problems, and changing buyer demands are putting pressure on the housing market. And while that doesn't automatically mean a housing crash is coming, the numbers are giving people plenty to talk about. So, is this just a correction, or could the housing market be heading for something bigger? Let's talk about it.
What is the alternative, guys? Like, who is going to step in and buy all of these homes that need to come up for sale? You know, the current generations who would like to buy them already can't afford them now. And in the future, you know, they're going to be asking more for these houses. And people will have even less money if this economy continues in this direction. So, who's going to be the buyers? That's what I'm asking you. Who is going to buy all of these homes? Before, people would say, oh, be all the institutional investors, be BlackRock and Blackstone and all of these guys, American Homes for Rent. Well, they just got banned. They can't own more than 350 homes. So they're not going to be coming to the rescue. Even if they did and they bought up all those houses, they would be turning them into rentals because that's what they do. And with that many rentals flooding the market, all in a relatively short period of time, next thing you know, rent prices would be crashing and the incentive for people to buy would go even lower.
Housing investors say this is the worst market in at least 3 years. Yeah, because it's getting really expensive to own a house, isn't it? Yeah, by the time you get paying the taxes, the insurance, the HOA, I mean, the upkeep on the house, everything is getting really, really expensive. So yeah, investing in houses isn't what it used to be. And especially at the interest rates we're talking about now, you got the double whammy. You got really high interest rate costs, and the price of houses is astronomical. It's because we're in a bubble. And the bubble was created years ago. I mean, let's not forget why this bubble is here. This bubble is here because interest rates went to 2.5%. That's why we are at where we are at. So if you think housing is bad now, wait till you see 2028 and the complete crash that is coming. Like and follow for more.
One of the reasons why we're struggling with people's ability to afford a house is not only real wages, but the other piece is that homes are just expensive. The median price of a brand new house is $413,000. Existing home is something like $434,000. And most people can't afford it. They're just literally locked out of the market. Remember, this is a function of the prices being high, but also the financing rate is high. Remember, mortgages are tied to the bond market, the 10-year treasury, which is high. So people can't buy a home because you can't afford to finance one. And even if you are in a home, you can't move out of it and get into a similar size home elsewhere because it would almost double the price of your mortgage. How is that? 40% of the people who own a mortgage bought one and have a mortgage that is less than 4% because they had it post COVID. Well, if you got a house that's $600,000, you want to move and you want to go to another state and buy another $600,000 house, it's going to be twice as expensive because your mortgage went from 2 to 6. And so you have a situation where most people can't get a house because it's just too expensive. But that's not the only problem. The other problem is that we don't have enough of them. Depending on who you talk to, we're short about 1 million to 5 million homes. We have a deficit of homes in the country. And how long is it going to take to build 1 to 5 million homes so that more people have a house to possibly move into, and causing prices to come down because there's technically more supply and demand? More houses, prices go down.
Right now, we are experiencing something called the Great Millennial Housing Freeze, where we have two distinct group of millennials that can no longer afford the homes that they anticipated. Let me show you what's going on here. So we've got group number one, the younger millennials like myself and my wife. We're looking for starter homes that are just like this, a 1,600 square foot house that we can start a family in. And we can build equity in this so that we can take that equity and move on to the next home. But then homes like this are selling for $425,000 when we were anticipating something between $150,000 and $300,000. Because when we entered the workforce, that's what these homes were selling selling for. This exact home sold for $174,000. In today's money, that should only be about $215,000. So that's younger millennials. But then we have the older millennials who are in their mid 40s now. They've had a home for between 10 and 20 years, and they built a lot of equity, and they've saved a lot of money through their years of work. So now they start planning for something much bigger, a 3,700 square foot house that they could raise multiple kids in, or it can even be multi-generational. But then this home goes and sells for $690,000. And the older millennials were planning on spending between $300,000 and $500,000. Because when they started planning for something like this exact home sold for $350,000, meaning that in today's money it'd sell for between $400,000 and $450,000. Thus, we have the great millennial housing freeze. Younger millennials are choosing not to enter the housing market because they simply can't afford it, and they're going to take that money and travel and just have some fun. While older millennials have the cheapest housing that they could possibly have because they bought their house cheap and they have extremely low interest rates. So they're never moving, because if they sold their home, they're gonna have to buy a whole bunch more house and have a higher interest rate. So we were sold this dream by older generations who have literally screwed us. What they once did, because of policies that they've made in the past 6 to 7 years, we can no longer afford what they did. So we're just saying screw it. We're just not going to do it. Let me know what your thoughts are, and tell me if you've experienced anything like this.
Yeah, the housing market crash that's about to come, dude, is going to be bigger than 2008, considering if you look at all the numbers, institutional investors look at everything that they're doing. But who the fuck is buying a house with 6.5% interest rate right now? Nobody. So even if you can afford a house, nobody's buying houses. Inventories are fucking starting to skyrocket. And institutional investors are starting to dump all their properties because they see the writing on the wall too. Now, we do have some new legislation in certain states that ban institutional investors from buying properties. So hopefully this is going to be a necessary market reset, dude. So what does that mean? Bro, get your money up. Get your money up. Let this motherfucker crash. So by the time things stabilize, you know, all the institutional investors in all the states where it's not banned by legislation, they're going to, you know, dump property right now, buy it up cheap, and just rinse and repeat the cycle that they always do. But there may be an opportunity for regular ass people to buy a house, hopefully after this motherfucker crashes, and then we get a new administration that knows what the fuck they're doing, and you can buy a house at a reasonable market rate and price. So I don't know, I'm indifferent to shit like this. I'm like, fuck it, bro. Let it crash. Let it fucking crash, dude. Just be prepared that this motherfucker is gonna crash.
2026 is going to go down as one of the hardest years in real estate history. The cost of money is high. The average price of the regular home out there is still considered to be relatively high. Buyers and sellers are kind of just exiting the market, although sellers are stacking listings like crazy right now, so supply is coming back. That should tell you that price corrections should be coming back as well. Even though it looks really gloom and doom, that should not be your excuse to not try. I have a lot of buyers that come to me and they say, when's a good time to buy? Like, even, you know, I still have buyers, by the way, people. I still have a lot of buyers asking me and kind of trying to feel out the market and figure out when to do it. I'm telling them it's this winter. But with the rates, God, I mean, the rates, yes, the rates are bad. But you're going to see higher days on market. You're going to see motivated sellers. And especially if there's a seller who has to sell, maybe they're close to underwater. Ooh. There's still a lot of opportunities out there.
Yes, I agree. I think the downturn of the housing market and the unwillingness of people to continue paying high prices to stay in apartments and instead moving home is going to be the catalyst that leads to a rise in multi-generational family homes in America. It will no longer be paying high rents to a landlord. Instead, it will be multiple adults coming forward to maintain a home. I think this is a turning point in America. All around the world, multi-generational homes are sort of the norm, but in America, individualism has been pushed. Our suburban realities was one that promised us sort of a safety net of privacy from other people, including our own family members. Now that changes. Grandma may have to shack up with their child, and the child of that child may have to come home after college to live with their parents again. It is no longer worth it to throw away your money into these luxury apartments, especially when you can't even expect rent to stay the same from year to year. So what's going to happen instead, especially as being in a house becomes more expensive due to property taxes and other expenses, adults are going to have to come together to maintain the family home, the base. The late 2020s will be defined by a rise in multi-generational living in America.
What do you think? Are we looking at a housing correction, or do you think a bigger crash could be coming? Let me know in the comments. And I just want to say shout out to all the creators of these videos, and thanks so very much for watching. Please don't forget to like, comment, share, and subscribe, and I'll see you in the next one.